Hello and welcome back. My name is Jamie Mordaunt and today we're going to talk about the inevitable. And what is that? That's a market crash. Now we're going through some great times at the moment. We're making some good money. But what do we know will happen? We know there will be a crash at some time. Since 1928, we've had 12 crashes where we've lost over 30% of our portfolios. In my lifetime, there's going to be another 10 crashes. So we've got a plan for that and how are we going to do it. These are my top 5 ways of preparing for the crash. Now my first point of surviving a market crash is to get yourself an emergency fund. Now we have this so we don't delve into our pension pot or we don't go into debt, which I've told you is the worst cognitive dissonance of them all. Don't go into debt. Get yourself an emergency fund that is 3 to 6 months of your daily living expenses so you don't need to worry. Worst case scenario, like we've seen in 2020 so many times, is people being laid off left, right and centre. When you get laid off, what do? You panic and you start selling off your investments. You're selling them off at the worst time and it's such a human behaviour to do. You see the markets going down, you pull out. That's the time when you should be putting money in. You don't want to go into debt either. Suddenly you've lost your job and you think, right, I need to pay the bills and get a credit card. You're just compounding those losses. Don't start taking out of your investments. Worst thing to do in the world, and I'll give you that advice for free. When you sell your investments, you want to sell them because you want to, not because you have to. And one thing that's been drilled into me throughout my 20 years in the industry is, what does it mean to you? If you've got that pool of cash and you don't need to worry, you don't need to sell those investments you worked so hard to buy, what does it mean to you? It means you have peace of mind. It means when you go home, you can play with your children and you can sleep well at night and you don't need to worry. Building up that pool of cash is vital to your longevity. Hey guys, before I get to my second point, what I want you to do is like and subscribe to my channel. Help me out, let's build this channel together. We are increasing in size. As we increase in size, we increase in our finances. Now, once you've got that pool of cash, the second thing you want to do, now it's not as important as the first one, but it's a good opportunity. And what is it called? It's called a market opportunity fund. This is a little pool of cash. It doesn't need to be much. It needs to be $5,000 that you're going to have set aside that you've not got invested, that you can use to go out there and buy investments that have taken a hit over the last week, 2 weeks, month, and you know you're going to make the money back in the long run. Now, I know this is a little bit thinking outside the box when you've got people worried about paying the bills, but if you've put these funds aside, you can attack the markets. And you look at some investments, S&P's made over 45% in 6 months since Corona got put out there. Having a pool of money set aside for investments is a great idea and a great opportunity. I mean, think of it this way. When you go down to the store and they've got a sale on and you've got, your favorite Gucci shoes and they're at half price, what do? You don't just buy one pair, you buy 2 pairs. So why don't you do that with your investments? When the markets are down, you know they're going to come back up. You go and buy 2 pairs of shoes. You double your investment and you know that in the future it's going to help you phenomenally. Now, my third point on this is sometimes when you've got a lump sum of money, it can be scary putting it into a market that's going down. So how do you work with that? This is called planning, and it's something that we all need to do, and you just need to get on and actually do it. Investments aren't just lump sum, they're continuous, and I've spoken about this a lot about dollar cost averaging. When you've got an account that you drip feed into an investment linked savings account on a monthly basis, you're able to use these times and make the most of your money. You don't need to gamble too much. If you know that you're catching the highs and the lows all the time throughout the years, you're gonna be fantastic. You're gonna make money. You don't need to stress. Get yourself some sort of, whether it's a children's education plan, a savings plan, and a pension plan, or you just want to buy that yacht, contribute into an investment-linked savings plan on a month-to-month basis, and you're going to do well for yourself. We're all human beings, and we all look at these spreadsheets and we say, oh, I should have bought that when 2 weeks ago and I'll be 40% up. But most of you don't have the kahunas to actually do that. We all know we should buy low and we should sell high, but how many people actually do it? With dollar cost averaging, buying into it every single week, every single month, it's doing it for you. It's taking out the emotions, and whether you like it or not, it's doing it. Your money is going into that S&P 500 or into that Vanguard fund or whatever it is, and you are riding through the good times and the bad times. And when you come to retirement, you'll be seeing that nice big pool of cash, and all you've done is planned. Now, my fourth point is, don't just rely on one income stream. I think we've all seen over 2020 that jobs that you thought would be there for life sometimes aren't. You can't rely on the job you've got today to have it tomorrow. We've looked into the hospitality world and we've seen cruise ships that are just sitting off beaches now. We've seen hotels that have been closed that we thought would be up and running for decades to come. You can't rely on one stream of income. You need to actually think about having multiple streams of income that can contribute money to you and your family. It doesn't need to be huge amounts, but $1,000 here and $1,000 there. So what do you do? I mean, look back on yourself and say, what did I enjoy that I can continue doing and continue making money? Perhaps photography is the thing for you. Can you make money doing photography? Or how about doing a little side job? Employ a few people that are able to go out and clean apartments. What can you do? What are you good at? And what can generate you a second, third, and fourth stream of income? Before I get to my final point, check out my last video on stock crashes going into holidays. Yeah, it could help you out in the future. And my final tip is, don't put all your eggs in one basket. I know your mum and dad have told you that growing up. Don't just put all your money into one stock, because it might do fantastic, but it might not. Imagine if you put all your money into American Airlines. It dropped 70% in the beginning of 2020, and what would you be sitting on now? Not much at all. Look out there. I mean, there are mutual funds that cover just about everything globally. Companies like GAM, Brewin Dolphin. Now, they always have sort of a balanced portfolio, a growth portfolio, and a cautious portfolio. So they've got stuff to suit your needs. And what are they? They're basically investments that hold everything. So it'll go from the airlines to Bitcoin to pharmaceutical to technology, and they just hold to 1 or 2% maximum in anything. So you're still gaining from the markets, and you're covering your losses. If you're losing a little bit of money, you're not losing everything. You're making more money than you're losing. Mutual funds are a great way of doing stuff if you don't have huge amounts of money. So, as I said, don't put all your eggs in one basket. Diversify. Thank you for watching, guys, and I'll see you next time.